A little more than a week out from the launch of those spot Bitcoin ETFs, and despite the hype, price of Bitcoin has fallen about 11% since then.
The price of Bitcoin keeps dipping, and the mainstream media loves it.
The results so far, they're underwhelming. The price of Bitcoin itself has fallen to its lowest level since SEC approval, underperforming other asset classes like gold, bonds, and global equities.
They're even spinning this narrative that the historic Bitcoin spot ETFs were a failure, which is a lie. BlackRock and Fidelity each now hold more than $1 billion in Bitcoin in their ETFs. In fact, they're two of the fastest ETFs in history to gain $1 billion in assets. Out of over 5,000 ETFs, BlackRock and Fidelity are now top 4.
Grayscale, meanwhile, has seen more than $1.5 billion in outflows.
And yes, Grayscale is selling.
Perhaps further pressuring it to lower fees. Remember, it has the highest fees by far.
In fact, they sold over 52,000 Bitcoin since the spot ETF was launched. That's about $2 billion sold in a single week. Some investors are just cashing out, taking profits to get into the better ETFs. But most people aren't aware there is, for tax reasons, this 30-day lapse.
You have lots of investors that went into the Grayscale Bitcoin Trust at 2%. They bought it at the Bitcoin at 50,000, 60,000, 69,000. And so when the ETF became available and they were able to sell the Grayscale Bitcoin Trust and take a loss for tax purposes, and you guys know this, they have to wait 30 days before they can reload. But it's a great arbitrage for these people. They can go from a 2% trust into a 21 basis point ETF, and they have to wait, and there's a lot of churn.
So understanding that volatility is expected, and you can't have an asset that goes up 160% over the last year without expecting some dips along the way. Very normal. The real question is what's next?
Price goes to the moon, literally. It's a perfect economic experiment of supply and demand.
In an exclusive Spaces hosted by Altcoin Daily yesterday, crypto expert Invest Answers gave the math behind the accumulation happening now with the Bitcoin from these ETFs.
My math tells me that if the rate of acquisition of Bitcoin continues like it has done over the last 4 days, that means the ETFs will take 3.26 million Bitcoin out of the system in 2024, which isn't even possible because there isn't that much available. There's less than 1.8 million on exchanges right now.
Now, if you're not subscribed to us on X, what are you doing? There's a link down below.
But what happens when there's not enough Bitcoin out there? Like there's not enough being produced for the people that want to buy it. What happens to that?
And in this was hosted by my brother, actually. There's 2 of us on this channel. And he plays devil's advocate, saying, maybe Bitcoin already topped. These ETFs already launched. It happened. Invest Answers push back on that.
Well, what catalysts? Well, I mean, all the biggest catalyst is behind us. BlackRock already listed it. What catalysts do we have going forward?
It's Aaron. You're very funny. I love how you try and rile people up. Let me just say a couple of words on this. This is more than a halving. Would be a triple or quadruple halving, if anything, for the following reasons. First of all,
so yes, we are speaking about both the ETFs and the halving happening in 90 days.
We have never had a halving going into diminishing supply like now, first of all. Second, we have never...
Well, what do you mean by that? What do you mean going into diminishing supply? We've never had that before. What do you mean?
So before, in the past, typically there was increasing supply of Bitcoin. Now, for the first time ever, the supply is going down, which means the long-term holders are holding a lot more and more of the supply. It's going up and up. I think the long-term holders now own 70% of the actual Bitcoin supply. Short-term holders of 30%. That's never happened at this stage of the halving before. And that's only going to get more extreme because people are not going to sell until a year after the halving. So your colleague on the other line was dead right on that one. So we don't know what's going on. Second of all, Bitcoin has been classified as an asset by traditional finance. I'm a TradFi guy. This is huge. Third, we have players that have just entered the market that took 78,000 Bitcoin out of the system in 4 days, okay? Yes, I know there's recycling from Grayscale out, but that's about a third to a quarter of the total demand. So if you imagine Grayscale, say 78,000 is being consumed by these 11 ETFs, 26,900 is coming out of Grayscale over 4 days. So net, you could call it 50,000 is being pulled out of the actual environment. The amount of supply issued per day is 900. That's going to 450 on April 19th, 90 days away, which is bonkers. Now, my math tells me that if the rate of acquisition of Bitcoin continues like it has done over the last 4 days, that means the ETFs will take 3.26 million Bitcoin out of the system in 2024, which isn't even possible because there isn't that much available. There's less than 1.8 million on exchanges right now.
And here's where this gets interesting. Keep listening, keep watching, keep liking.
And I estimate even if I take a quarter of that, you get about 1,850,000 Bitcoin. And most of the amount of Bitcoin that's going to be produced in 2024 is 216,000. And we're talking 1 million at least will be consumed by the ETFs. So it is going to be a bonkers bull run. And what's happening right now is really bizarre because it could be, the psychology of buy the rumor, sell the news. People don't know how to react to this. They're like pissed off. It's not at $100,000 already. So they're saying, screw this, I'm going into altcoins. Or the market's being manipulated somehow with OTC transactions.
But what happens when there's not enough Bitcoin out there? Like there's not enough being produced for the people that want to buy it. What happens at that point?
Price goes to the moon, literally. It's a perfect economic experiment of supply and demand, and it'll be very exciting to watch. I'm sitting here with my popcorn, maybe a bottle of wine. It's going to be fun. And we will get $5,000 candles. We've had two $3,000 candles this year so far. We will get a $5,000 candle next when the OTC gets drained and the miners have sold all their gear, which they just dumped a huge amount over the last 4 days. Then we're going to get that crunch, and then it's going to be fun. Mark my words.
And let's remember what happened when the gold ETFs were launched for the very first time back in 2004. We had a rally into the approval. For the next several months, gold's price dipped or was stagnant, and then went up over 320% over the next 5 years.
And if we take the gold ETF as an analog, that could mean, and remember, gold is not hard like Bitcoin. Bitcoin is as scarce as can be. If there is anything like the continuous flow of money like we had at the gold ETF, Bitcoin could go up straight for 8 years. There may be no more bear markets. There's probably a 15% chance of that happening. So bear that in mind too.
I do think it took like a year or two before gold, because there was a dip after it launched, and then it went up hardcore. I do think the gold ETF took a year or two.
About 6 months. And the reason for that is financial advisor experts, they have to do the research. They have to take their time to learn about this new asset, gold ETF. And then they have to educate their clients. And then their clients have to pull the trigger. And that's the 6 month time lag you're seeing there.
This is the perspective the mainstream doesn't want you to see. And now looking at altcoins, different categories, different trends that I want to continue sort of putting on your radar. Digital identity, I feel, is going to be a trend in 2024. And the news today is for Root Protocol. The one-stop station digital identity service, Root Protocol, raises $10 million in seed funding. And why this is significant, and by the way, I am an investor in this, but why this is making headlines is because the funding round, which gave Root a $100 million valuation, was led by Animoca Brands, which is huge, and included contributions from a slew of other notable investors, including Signum Capital, Anchor Network, CMS Holdings. And how this affects you: number one, just keep digital identity in general on your radar. And two, what Root Protocol is. They are building a Web3 operating system that will serve as a digital identity aggregator, becoming a one-stop station for all things decentralized identity to make accessing different Web3 platforms a more seamless process. As I get more info, I will keep you updated. Click subscribe. Like always, see you tomorrow.